When we look into 2021 and beyond, there are things that were unprecedented in 2020, certainly the pandemic and COVID-19, and we will not have anything to base our predictions for vaccine or speed at which that will be dispersed globally. We don't know those things today. We can anticipate by the speed, and so far the trials are going very, very well and arguably much better than expected. So we may have a more rapid economic boom than might be otherwise expected, which could cause some adjustments in expectations, particularly in inflation. If the entire economy, especially global economy, booms at one time and it's unprecedented at the pace at which that expansion is happening, and we could look at parts of Asia today and say we might be on that trajectory already in some parts of the world, inflation could be something that we need to be mindful of. That could have an impact on the long-term interest rates, and that could have an impact on some fixed income or bond prices. That's something that could happen. We're not anticipating inflation because inflation has really been at bay for quite some time. And also we have to remember that the service economy and the online economy that we are seeing today is not necessarily a price increase versus prior market booms. When we look back when it was more manufacturing based or autos based or home improvement based, there could be pricing power within that. We have to be aware of that. The other element would be, is there a critical demand for employment, meaning that employees, new employees to service this economic boom might be harder to come by, less workforce available. This would be towards the end of 21 and maybe into 22, and wage inflation could be an issue. Those are things that could happen. And again, I hesitate to say that these are meaningful because they're so far out that they would not impact anything in the next, say, 12 months or so. So those are two things that could happen. The other thing, of course, we need to keep an eye on is any fiscal or regulatory change coming out of the US government that would be unexpected. And those specifically would be regulatory controls on different companies or industries or taxes. And again, today we don't have any visibility that any of that is going to happen. We actually expect a fairly modest or moderate oversight from the US government in the coming 12 to 18 months. So the Fed, we know, will stay sidelined. They've been very vocal about staying sidelined. That is very encouraging from a growth perspective. So I would look specifically at inflation as a potential late 21 risk, or any type of political change that is unexpected. Those are things that we would definitely be keeping an eye on.
投资一定有风险，基金投资有赚有赔，申购前应详阅公开说明书。